In Southeast Asia, a region known for its dynamic economies and vibrant cultures, a significant shift is about to occur in the financial landscape. Thailand is on the verge of a major financial transition, a moment that could redefine its economic trajectory for years to come. The country stands at a crossroads, ready to embrace new leadership and strategies in its central banking system. The Thai cabinet has nominated Vitai, a name that is now on everyone's lips in financial circles, as the next governor of the Bank of Thailand. This decision has sent ripples throughout the nation's economy, sparking both excitement and cautious anticipation. This marks a pivotal moment for the country's monetary policy, a turning point that could influence everything from inflation rates to investment flows. The direction of Thailand's financial future hangs in the balance. Vitai's background is unique. He's not a career central banker, a traditional path to such a prestigious role. His appointment breaks the mold and signals a potential shift in priorities, but a leader from the state-owned government savings bank. This is a significant departure from the norm, raising questions about the future direction of the central bank. His experience centers on grassroots financial inclusion and supporting government policy, focusing on the needs of everyday citizens and the broader economic goals of the nation. Not just macroeconomic theory, he brings a practical, hands-on approach to the table, a perspective often missing in the halls of central banking. This raises immediate questions. What will his priorities be? How will he balance the needs of the people with the demands of the global economy? Will he maintain the central bank's independence, a cornerstone of sound monetary policy and investor confidence? The world is watching to see how he navigates this delicate balance, or move toward closer government collaboration. The answer to this question will define his legacy and shape the future of Thailand's economy. As head of the government savings bank, Vitai focused on debt relief, providing a lifeline to struggling families and small businesses across the country, and access to credit for ordinary Thais. He championed initiatives that empowered individuals and fostered economic growth from the ground up. Supporters see his perspective as a strength, a breath of fresh air in a world often dominated by abstract economic models and detached financial theories, potentially making the central bank more attuned to everyday citizens, understanding their struggles and responding to their needs with empathy and pragmatism. The announcement is just the beginning of a formal process, a series of approvals and confirmations that will determine whether Vitai ultimately takes the helm. But it sets the stage for a new chapter in Thailand's economic story, a chapter filled with both promise and uncertainty, hope and trepidation. Vitai now stands on the edge of immense responsibility, poised to shape the financial destiny of a nation. He will soon control interest rates, wielding the power to influence borrowing costs and investment decisions across the entire economy, currency management, navigating the complex world of foreign exchange markets, and safeguarding the value of the Thai baht, and the stability of the financial system, ensuring that banks remain sound and that the economy is resilient to shocks. Every decision he makes will be closely watched, scrutinized by economists, investors, and ordinary citizens alike. The nation's economic hopes are shifting onto his shoulders, a heavy burden to bear, but one he seems ready to embrace. Thailand and the world waits to see what kind of governor he will be. Will he be a bold reformer, a cautious steward, or something in between? The stakes could not be higher. The future of Thailand's economy rests in part on his leadership. Appointing a central bank governor, a pivotal role in shaping a nation's economic landscape. It's a decision that carries immense weight, influencing everything from interest rates to financial stability. The selection process is therefore, understandably, a meticulous and carefully orchestrated affair. In Thailand, this process is particularly unique, reflecting the country's rich history and complex political structure. It is a process rooted in tradition, steeped in cultural norms and historical precedents that have evolved over centuries. The appointment isn't just a matter of filling a vacancy, it's about upholding a legacy. And constitutional protocol. Every step is meticulously defined, ensuring transparency and adherence to the rule of law. The Constitution provides the framework, but the traditions add layers of meaning and significance. The cabinet's nomination is only the first step. It's a crucial one, signaling the government's preferred candidate, but it's far from the final say. The nomination sets the stage for a more profound and significant endorsement. The final authority lies with King Maha Vajiralongkorn. His role transcends mere formality. It embodies the continuity of the Thai state and its commitment to stability. Royal endorsement is more than a formality. It's a powerful symbol of unity and national identity. It symbolizes the monarchy's stabilizing role, a constant presence amidst the ever-changing tides of politics and economics. The monarchy provides a sense of reassurance and long-term vision, and grants legitimacy to the office. It's the ultimate seal of approval, signifying that the appointed governor has the confidence of both the government and the crown. This process is designed to buffer the central bank, shielding it from undue influence and ensuring its ability to act in the best interests of the nation's economy. From political pressures, which can often be short-sighted and driven by partisan agendas, reinforcing its independence. This autonomy is crucial for maintaining credibility and fostering trust in the financial system. The governor's mandate is confirmed by the highest authority, ensuring a broad base of support and a long-term perspective. Not just the government of the day, which may be subject to change and shifting priorities. This provides stability and continuity. For Vitai, this means his appointment carries a unique responsibility, must transcend politics, requiring him to act with impartiality and integrity, always prioritizing the nation's economic well-being. After cabinet approval, a significant milestone in the selection journey, the Prime Minister's office submits his name, along with all the necessary documentation, for royal assent, the final and most symbolic step in the process. Only with the king's approval, signified by his royal signature, does his 5-year term officially begin, marking the start of a new chapter for the central bank. This blend of modern governance and tradition creates a unique system, one that balances the need for efficiency with the importance of cultural heritage, ensures the central bank serves the nation as a whole, acting as a guardian of its economic stability and prosperity. As Vitai awaits this final step, the culmination of a rigorous and time-honored process, the financial community prepares for a new era, anticipating the leadership and direction he will bring to the central bank. Vitai Ratanakorn's most recent role was as president and CEO of the Government Savings Bank. The GSB is a state-owned bank focused on promoting savings and supporting government development at the grassroots level. Vitai's leadership was defined by hands-on, socially responsible programs, especially tackling Thailand's high household debt. He prioritized debt restructuring, low-interest loans, and financial literacy for vulnerable groups. Unlike most central bank governors, his expertise is operational and people-focused, not just theoretical. This makes him a pragmatic leader, deeply aware of everyday financial struggles. His close collaboration with government policy is seen as both a strength and a potential risk. Supporters argue Thailand needs this practical approach now. Critics worry it could come at the expense of orthodox monetary policy. Vitai succeeds Sethaput Suthiwartnaruaput, a respected economist reaching the mandatory retirement age. Sethaput's tenure was marked by steadfast independence and a focus on stability, even during the pandemic. He resisted political pressure to cut interest rates, arguing for long-term solutions over quick fixes. His principled stance earned international respect and reinforced the central bank's credibility. The transition to Vitai signals more than a change in leadership. It hints at a shift in philosophy. Sethaput was the orthodox guardian of stability. Vitai is seen as more aligned with the government's pro-growth agenda. The contrast is stark, policy purist versus pragmatic implementer. This change sets the stage for a new era at the Bank of Thailand. The nation watches to see how this shift will play out. Vitai inherits an economy at a crucial juncture, facing a confluence of challenges that demand immediate and strategic action. The economic landscape is complex, marked by both opportunities and significant headwinds. He steps into this role amidst slow growth and daunting challenges that require a steady hand and innovative solutions. The weight of expectations is considerable, as the nation looks to him for guidance and stability. Thailand's domestic consumption is weak, a persistent issue that has been dampening economic activity across various sectors. Consumer confidence remains low, impacting retail sales and overall spending, and household debt is among the highest in Asia, creating a significant drag on the economy. Many families are struggling to manage their finances, leaving them with less disposable income for consumption. This debt burden stifles spending and investment, as individuals and businesses prioritize debt repayment over new ventures and expansions. This cautious approach further slows down economic momentum, creating a cycle of stagnation that is difficult to break. The lack of investment and spending reinforces the slow growth, making it harder to stimulate the economy. Vitai's experience at the government savings bank gives him insight into the intricacies of the Thai financial system, providing a valuable foundation for his new role. But the central bank requires broader strategies that go beyond traditional banking practices. He must navigate complex monetary policies and adapt to evolving economic conditions. Externally, Thailand faces global uncertainty, stemming from geopolitical tensions, fluctuating commodity prices, and shifts in international trade dynamics, and the threat of U.S. trade tensions, which could significantly impact Thailand's export sector. The potential for tariffs and trade barriers looms large, creating anxiety among businesses. As an export-dependent nation, Thailand's economic health is closely tied to global trade flows and international demand for its products. Any trade shock could derail recovery, undermining efforts to boost economic growth and create jobs. The ripple effects of trade disruptions can be far-reaching and difficult to mitigate. The policy toolkit is limited. Interest rates are already low, leaving little room for further monetary easing to stimulate the economy. This constraint limits the central bank's ability to respond to economic downturns. And fiscal space is tight, restricting the government's ability to implement large-scale stimulus packages. Budgetary constraints limit the scope for public spending on infrastructure and social programs. There are no easy answers. The path forward is fraught with challenges and difficult choices that require careful consideration. Stimulus risks inflation and capital flight, potentially destabilizing the economy and eroding investor confidence. While caution risks stagnation, prolonging the economic downturn and hindering long-term growth prospects. Vitai must balance growth, stability, and long-term sustainability in his policy decisions, a complex task that requires careful calibration, debt management, and external shocks, all while navigating a volatile global economic environment, all while maintaining credibility with both domestic and international stakeholders. Trust in the central bank is paramount for ensuring financial stability. He'll need to be both diplomat and policymaker, skillfully navigating complex negotiations and building consensus among diverse interests. The margin for error is slim, demanding precision and foresight in every decision. Every move will be scrutinized by analysts, investors, and the public, adding to the pressure on the new governor. By markets and the public, who will be closely watching for signs of progress or setbacks. The new governor faces a delicate balancing act, requiring him to juggle competing priorities and navigate conflicting interests. Success could mean renewed prosperity for Thailand, paving the way for sustainable economic growth and improved living standards. Failure could deepen Thailand's economic woes, potentially leading to a prolonged period of hardship and instability. Vitai's selection was not inevitable. Rung Malakamas, a respected deputy governor, was the other top contender. Rung represented continuity and deep central bank expertise, with a career spent inside the institution. Her appointment would have reassured markets of ongoing independence and orthodoxy. Choosing Vitai signals the government's desire for change and closer alignment with its economic agenda. The decision reflects a preference for practical, state-led experience over traditional monetary theory. This is a calculated risk, faster policy coordination, but potential concerns about central bank autonomy. The choice between Vitai and Rung was a choice between two visions, independence or partnership. The government has clearly chosen the latter. The implications will shape the bank's future. The relationship between Thailand's government and central bank has been tense, with public disagreements over interest rates. The government wants lower rates to spur growth. The outgoing governor resisted, citing long-term risks. Vitai's appointment is seen as an attempt to bridge this divide. His background suggests he may be more receptive to the government's pro-growth agenda. The hope is for closer coordination between fiscal and monetary policy. But the risk is real. Too much alignment could erode the bank's independence and credibility. Vitai must balance partnership with principle. How he manages this relationship will define his tenure. The first major issue on Vitai's desk will be interest rates. The government argues rates are too high and wants immediate cuts to boost the economy. Vitai is expected to be more open to easing than his predecessor. Markets are already anticipating a shift in policy. A rate cut would be a win for the government and a signal of new direction. But risks remain, inflation could rise, and the baht could weaken, unsettling investors. Vitai must weigh short-term relief against long-term stability. His early decisions will be a test of his independence. The outcome will set the tone for his governorship. Vitai Ratnakorn's appointment could mark a turning point for Thailand's economy. If successful, he may be remembered for breaking the cycle of low growth and high debt. His grassroots experience could inspire innovative solutions to deep-rooted problems. A balanced, resilient economy and effective government collaboration would define a successful legacy. But the risk of eroding central bank independence is real. If seen as politically driven, trust and stability could be lost. Vitai's tenure will be a tightrope walk between growth and stability, partnership and independence. The stakes are high, not just for him, but for Thailand's future. As he takes the helm, the nation's hopes rest on his leadership. The course he charts will shape Thailand for years to come.